code. Yes. Okay. So we can say that as our take profit can even be there. This is our previous low, or it can be the lower there. Putting in mind that we have not targeted in. We have not targeted the. Uh-oh. Disappeared. We haven't targeted the low of the 4-hour time frame. You see, we haven't targeted the low of the daily time frame. You cannot target the low of a daily time frame unless, you see, we didn't target this low unless you are a swing trader. But you cannot be a swing trader with a 100 USD account. No. You won't make money from that. You may only, if you have a hundred USD account, you may only be a day trader or a scalper. Swinging is only for big boys, for big accounts. Okay? So you would have taken that trade. You would have taken that trade, your take profit there, or alternatively, your take profit there, okay? With your take profit there, like that you are holding for too long. With your take profit there, maybe it will take a day or two, because I know in our team we hold we sometimes we hold a trade for more than a day or two, okay? So it is in line with our strategy, and maybe, and then you wait for another play out. Every time you are trading, you must look at the chart pattern. What chart pattern is presented, and the way it is being presented. Now, every time you must look for a fingerprint, hook point, previous low, or a level that was respected as a support, or 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 resistance. And if you look properly, this is such level. It was a support, it was a resistance there, it was a support there, it was a support here, it was a support there, and then it was a resistance level there. And then we can see another hook point or a previous high that needs to be cleared before the market can move in the direction that it's supposed to go. Okay, so this is what I'm talking about. That is my high. This high needs to be cleared before the market can go down. But it needs to come to that particular high in a form of a chart pattern. That's all we look for. So it needs to come. You don't have to sell there. Now you will kill yourself. You are holding. You need to hold until this should be your take profit. This should be your take profit. This should be your take profit. If you hold, if you sell there, you are killing yourself. You are killing yourself. Do we see? Do we see? Do we have a pattern? Maybe you can say you do have a pattern. No, you don't have a pattern. You don't have a pattern. There's no clear pattern there, so you cannot sell from there. You need the market to come to your hook point or to your previous high to liquidate your high in a form of a chart pattern. And we can see something very interesting here now. We can see something very interesting there. Okay. First touch, second touch, a third touch. All right. And then, very nice. So we can see a bearish continuation flag. So what you would have done, this is your first touch. Okay. That is your first touch, your high, your first touch. Your second touch, clear that liquidity. Your third touch confirms your entry. Again, we need to wait for a bearish candlestick pattern. This is a tweezer top, bearish candlestick pattern that we are very familiar with. And then we take the sell there. Okay, we take a sell there. Our stop loss should be below there. Can you see? Our stop loss, I mean, should be above that high. And then our take profit, uh-oh, our take profit is there. Then you are done. You hold. The market comes back there. Don't panic. You don't need to panic. Your stop loss is there. Your take profit is there. You can go to work, come back, go to work. You don't have to spend time looking at the trade uh, on the computer. You can go to work, you can come back, and then before you know it, either you come back and then the profit you find it on the computer, or you come back and the market is still moving around. The problem is if you stay by the computer, the moment you see profit in there, you'll be like, this is 20 US dollars or 30 US dollars or 50, depending on how big your account is, maybe 200 US dollars, and then you start trading your account. You start stopping, you stop your trade, and you have done a bad thing to do so. All right. Then that is the market broke that level. Okay. When the market break this level, it didn't leave anything of interest. Nothing that interests you. Nothing that interests you there. However, it left this hook point there. It must be cleared before the price goes down. Okay? But as it comes there, it needs to come in a form of a pattern. Okay? It needs to come in a form of a pattern. Look at that. Okay? That was a pattern. That is one pattern. And then, or, yeah, so because we are looking at this one, so our pattern should be there somewhere. It's a bearish continuation pattern. But now our pattern should also clear our liquidity. And then this is the first liquidity that was cleared. And we must look for our pattern, our candlestick pattern, that we should find at the resistance level for us to sell. And then we take the sell there. We take the sell there. Uh-oh, yeah. No, this is a long. Let me look for a short. We took the sell. Oh my goodness. Okay, stop loss is too big. We take our sell there. We take our sell there. Okay. And then your first take profit should be there. Don't even take it too far. Your first take profit should be there. Okay? Your first profit should be there. Now, if you want to hold because you are very confident that this is a bearish continuation pattern, you can take your ruler, you measure that distance, okay, that distance, and then you bring that distance down here, then your take profit will be there. So your take profit, your take profit can be there. Okay, from there to there. This can be your take profit. But remember, you are still a day trader. Either you can hold. If you want to hold, at least you should have two entries. One entry, if you have a small account, one entry, you close it earlier, and the other entry, you hold it, but you hold it with safety because your stop loss must have moved to your break even. Okay, your break even, and then the market, for as long as you don't see anything interesting, you leave it. If you see something interesting, like we see something interesting there, if we see something interesting, like we see something interesting here, then you can take the trade. Yes, we need to see liquidity being cleared, and we can see it. The hook point is there. This is the hook point. This one, liquidity cleared. 3 touches. 1, 2, 3. And then 1, 2, 3. And then we take a sell here. We take a sell there. Because we know it's a downtrend and we are only looking for a selling opportunity. We take a sell there, and then our take profit is there. And if you so wish, you can measure that distance and then align it with that distance. But if you did, then you would have lost that trade, because this distance and that distance are not the same. So then you take that signal. You take that signal. And then you can see here, there's nothing interesting. There's nothing interesting. There will be time the market does not show you any clarity. You can't just trade because you see the market is moving down. No, 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 no. Don't do that. You can't just trade something because you see the market is going down. Leave. Only trade when you see clarity. Okay? Only trade when you see clarity. Again, this is the same level. The market. Okay? So if you are done with this one now, we can leave it for now. And we see this high. Okay? This is a footprint that the market left behind. It's a footprint that the market left behind. So anytime the market comes to that level, we expect a reversal. Even if, so that's what I'm saying, even if the market is not really moving downward, before it or it passes through this level, it has to reverse to look for momentum that it can use to push on the upside. But remember, we are still on a downtrend. And you can see after this coming to this high and they clear that liquidity, which is our hook point, and clear that hook point, and then the market went down. The market went down. Your take profit would have been here, just there. After seeing, you sell there, you put your stop loss there. It works on all time frame. You put your stop loss there, and then your take profit comes there. You see, your take profit comes there. It's very easy. Now, again, if you see another hook print, we can see another hook and another footprint here. That is why the market came to clear this liquidity before it pushed down. Again, it came in a form of a chart pattern, in a form of a pattern. That is why the market went down, you see. And then it keeps on going. It keeps on going. It keeps on going. So this was also another trade that we took as a team, which was very successful on our side. We saw this footprint. We waited for price to come to this footprint, and we were specifically looking for a very nice pattern. A very nice pattern, which we observed, which we saw. Let me just check. We were looking for the chart pattern that can guide us and show us that the market is reversing. And we can see that one is a reversal candle. This is a reversal chart pattern at a level of resistance, and we took our trade. We took our trade. The stop loss was a bit big, but I know it wasn't that big, because I think it was a 30-minute or 15-minute that we used. And then our take profit. Our first take profit was here. The second take profit was there. Okay? The second take profit was there. Okay? So literally, this was a beautiful entry. It was a very beautiful entry. Now, if you missed this entry, You just need to look for a continuation pattern, a continuation pattern, which we can see here. If I go to a 30-minute, let me just check. Okay, doesn't okay, it does want. Let's see if it will come back. Let's see if we come. Okay. Let's see if it will come. Yes, nice. On a 30-minute. It's so nice if you go to a much lower time frame so that you can see this beautiful move. Okay? You can see this beautiful move. Okay, we see that pattern, and then we see, okay, that one. 1, 2, 3. That is the third touch. All right, and then we would have taken our trade very safely. So we would have taken our trade from there, put our stop loss there, and target that low. It's a 1-to-1 ratio trade. It's a 1-to-1 ratio trade. Okay. And then there was nothing beautiful except here. We could see something very beautiful. We could see this footprint. We could see this footprint. The market went down and came back and leave a footprint. It left a footprint. There, we could see that footprint. And the market came back to that footprint in a form of a pattern. The market came back to that footprint in a form of a pattern. Okay. 3 touches, 1, 2, 3. It's a golden. When you see something like that, we call it a golden pattern. It cleared this liquidity and it gave us the third touch. 1, 2, 3. Don't even think twice. Okay. And then you could have taken this trade there, your stop loss here, and then your take profit at least there. Okay, at least your take profit is there. Then that would have been another winning trade. You see, that would have been another winning trade. Okay, that would have been another winning trade. Don't worry about this move. This move, you don't know how far the market will go. So you only trade what you know, the previous low or the previous high. That is your take profit. Previous low or previous high. All you need to do is increase the lot size. You can risk 50 USD and then target 200 USD. Or 50 USD, target 150 USD. 50 USD, target 100 USD. For as long as you are not losing, you are not targeting less than what you are risking. You can't trade like that. Don't risk more than your target. Okay? Don't risk more than your target. Okay? If we have gone to a bigger time frame, after some times, we could see this chart pattern. Let's see. We could see that this chart pattern, but again, nothing very interesting. Nothing very interesting. But what you should have done is every time you see consolidation, the market always leave a footprint so that the market comes back to that consolidation level. They take the liquidity and they go. A lot of time when it takes the liquidity, it's just mitigating the order block. Liquidity is not just taken. The market always come to mitigate order blocks. Okay, where's our order block? Right there. When you see it, don't ignore it. Right there. That is why the market came back there. Take this liquidity or take this high before it actually came to mitigate this order block, and then you would have sold. At least your take profit would have been here. at least, you take profit. At least your stop loss is there above your order block. At least your take profit would have been there this high. Okay, at least your take profit would have been there. You see how easy it is? It is good that we know the strategies, but every time we should align our strategies with the market structure. Don't just trade chart patterns because you see it's a chart pattern. No, the chart pattern should align with your market structure. That is the first thing that you start from. You start understanding your market structure. Is the market going down or is the market going up? The moment you see that, then we know from there what to do. Okay, so that is literally it. That is literally it on this on volatility. Justin,
Hi.
look at VIX 50.
Yes,
I
it
I said so.
mm,
I said this one, it can just pass this level without
the
retracing.
previous
Yeah,
mm,
it can't just pass this level. I knew so. It's like it can't just pass this level without coming back. We know VIX 50 is actually way below. The expectations are that okay, so I mean small profit. The expectations are that okay, if it has to go up, it has to come to this level before
mm,
it pushes up. It just can't go up without respecting the structure. So yeah, because we can see that it's an uptrend. It's an uptrend. If we want to see that, we can just go to a 4-hour time frame. It's moving from a downtrend to an uptrend. It has been
mm,
low. It has been low for too long. Okay, that
yeah,
is our trend line. And then another trend line. Okay, another trend line. This is where we are. Another trend line. And then we expect now at least the market to come there, go there, give us a third touch. Let me check. It gave us one touch, a second touch, okay, and then it's looking for a third touch somewhere there. I don't know, somewhere there. It can come there. So, but before it goes there, it might have to come this at this particular level, and then pushes up and come back down, either end there, continue to go up, or alternatively, it can also come there. And if it does come there, it is still on an uptrend. It's still on an uptrend. So we keep on observing. We keep on observing the price and see what the market will do. The best you can do is if you find your structure, take your trade, put a stop loss, put a take profit, and leave the house or leave the computer. You can even switch your computer off and then just wait for the market to play out as it should. So that is how you control your emotions. That is how you control how you feel and things like that. Okay. I think volatile Euro USD. This was a very nice trade. It was facilitated by CIP or the news event. It was facilitated by the news event. We held it for, I think it was 2 days, if I'm not mistaken. Oh, oh no, no, no. We only held it since yesterday. Okay. So I already took my profit. I already took my profit. It responded properly, but I'm still expecting this market to go there. But this was my low, and every time when there is a low or a high, price has ability to turn. It can reverse from there. It can reverse from there. So that is why we need to be very careful with key levels. All right. I think we will communicate more on the group. For now, this is where I end for today. Yeah, unless there's someone that want to say something or found something very interesting that they want us to look at it within the 4 minutes before we can push, we can go, we can leave the meeting.
Kindly check 100S.
100 first.
Yes.
I think we were just checking it. Today we're just checking it today. Let me look at it. Let me look at it. Okay. Yeah, I was just looking at it. Yeah. What is your expectations with the 100 first?
I wanted to buy from that level.
It will be a bad idea. It will be a bad idea. It will be a bad idea. It will be a bad idea.
Why?
Okay.
Why?
Okay. So you see this loan, eh? The market before it goes up, it has to it has to liquidate this low. It didn't. It's still very far. It has to liquidate this low, and you can see on a 4-hour time frame, this thing looks very bearish. It needs to liquidate
Mm.
this low. This low. It needs to sell this low, liquidate that low. It did not even liquidate this low. There's no way this market will go. It not even liquidate this low. This one. This low. You see, not even get there. Ah, this one is coming. Sunday is coming very late. Okay, it did not even liquidate that low. So it's not a very good opportunity. It's not a very good chance to sell from there. I mean, to buy from here. Wait for market to liquidate at least one of these lows, or at least this low. Remember, when there are too many lows and uh, too many liquidations, it is always safer to let the last liquidation, last level to be liquidated before you can push up, before you can move ahead with a buy.
So if you put like a diagonal support, it will not be valid.
Let's see. This one.
Mm.
It could be valid. It could be valid, but you need remember our way of trading is you if you want the market to come there, if you wait for the market to come there, you must wait for a bullish candlestick pattern that you are familiar with. You wait for the candlestick pattern that you are very familiar with, like a bullish, um, any bullish any bullish candlestick pattern. But for me, remember this one is still a downtrend. If we go to a daily time frame, look at where the price is. It's still very high. It's still very low. The market is still a downtrend. So the likelihood is that now the market may break this low, may break this trend line, come to this level, and then go a bit up before it continues to go down. So maybe up to that level, okay, break that liquidity, come back to that level before it pushes down. I don't see anything different, but this is also a very nice trade. I mean, a very nice level for as long as we see a bullish candlestick signal at that support level, we have a chance. We might have a chance of a successful trade. Okay, there's only a few seconds. I think if there's any question, let's just drop it on the group so that we can look at it. Hello?